Hey traders, in this free recap video, I want to talk about timing. And I think it's especially important when we're thinking about the 2 p.m. FOMC that we had today. And this was a question that came up throughout the day because one of the things that we want to do is take a more nimble, short-term approach to our trades when we know there's a major event. So it doesn't matter if it's an 8:30 non-farm payroll or a 2 p.m. FOMC or a 10 a.m. economic event, whatever it may be. It could be the end of the month, so 4 p.m. close. There's a lot of reasons to think that going into an event, there will be a lot of discounting. So that's really something that's an element of timing that I think is not talked about enough. Anytime the market is waiting for a particular event, they've already made an assumption about what they think that event could be, and they trade into that event in that direction. So, for example, if the FOMC is promising to be patient and we're looking for perhaps a larger balance sheet, these are all very bullish for the equities markets. So the market will assume that bullishness and buy into that event. Now, what I typically recommend traders do is one of two things. Now today, and I'm going to use the S&P as an example. Today, we were at the open above the sentiment line. And that's and I'm going to show you this right now on the 1-minute chart. We were above the sentiment line. And we'd stayed above the sentiment line for most of the morning. You know, if you take a look at this 1-minute chart, we went above the sentiment line since just about the middle of the London Open, so about 3:15, 3:30 a.m. Eastern, right? Now, if we're above the sentiment line, that means the market is bullish, all right? I'm looking for the market to remain above this line. Below this line, I'll look for bearishness, and that's this line right here, right there. That's what I call the sentiment line. Now, we know that once the bell rings, those 30 minutes between 9:30 and 10, right in here, okay, those 30 minutes between 9:30 and 10 are typically going to be the most volatile of the morning. So I want to be aware that the sentiment line could be broken. So we're going to look for a reemergence beyond two things. One, are we taking out the clearing range high? And two, are we trading back above the sentiment line? Now, I know there's a lot of boxes there. Let's clear this up. One, are we above the clearing range high? And two, are we above the sentiment line? Okay, if we are, we remain quite bullish, and we'll look for movement to the upside. All right. Now, the thing to remember about this is it's not just about just buying new highs as the market climbs higher. In fact, what I would rather everyone do here is, again, the sentiment line, gang, is the middle line of the volume weighted average price. VWAP has been part of my arsenal of tools on and off for many years. The reason it becomes much more pertinent, and it really became important last February and again in October, because when the market gets much more volatile than the expected price movement ranges that I've used on and off for about 10-12 years, I guess now, when we get beyond the expected price movement range on the S&P or whatever, I need something that's going to be much more adaptive to the current price action, and that's where I will transition to a volume weighted average price to help me understand volatility. And what side of volatility, the bullish side or the bearish side, are we on? So the thing that I would recommend is once we're above this line, don't use this as a blanket reason to just buy at any old spot. What I then would like to see everyone do is shorten the time frame and look for opportunities to buy on time frames that have what we call good structure. That means seeing the market above the wave, seeing the market trending with green grab candles, and buying pullbacks. So really, generally, it allows you to shift to a 5 or a 15 or any uptrending market and look for these opportunities to buy. Now this one right here, well, I really wouldn't have recommended that one. I mean, it looks so great. Here I am telling you in a video that I would not have recommended that one. It was valid, don't get me wrong, but this goes back to timing and volatility. If you've been buying all morning long and here you are going into the 2 p.m. event, this is where I would tell most traders, instead of, and this is great here, gang, listen up, because this is really going to be a needle mover. This, you could buy the S&P futures or a call option into that correction. On this move right there, 100%, please do not buy SPY. Please do not buy the S&P futures. buy an option. Protect yourself with the ability to have a dollar defined move. You don't want to be in a position that could move a huge percentage down, perhaps even gap down, and you're there with an unknown, unlimited potential loss. I mean, who knows what could happen, right? So I'll say look at an option on that particular buy. All right, so think about that. Think about structure. Perhaps play around with a volume weighted average price on the 1 minute chart. We'll be talking a whole lot more about this tool. These are tools that are available on many platforms. I happen to be using the TradeStation platform here, but I also use Thinkorswim for different types of tools. And you know what, you're going to find different tools are easy to use on different platforms, but I'll use those same tools on both of these. So check them out, see what you think. Leave some questions if you have any questions. Leave some questions, or I'll see you in the next update.